Episode 3 of Accounting Unpacked is about the buyback or the repurchase of shares. We hope you enjoy this episode and you can get some clarity on how to calculate average price per share and the premium, as well as how to make the entries in the cash flow statement. So this question comes from KZN Accounting Grade 12, September 2024, Paper 1. It was the cash flow question, and the learners were required to complete the retained income note. So they had the opening balance on the retained income note. They had to fill in the net profit after tax. Then they needed to calculate what to enter for the buyback of shares. Now, Yaki, what do we need if we're doing a buyback of shares?
Okay, at first we need to know in your note that's on the screen, that first note, is that we need the average price of the shares. And then for the retained income, we need to know the above average. Okay, also called premium then.
Yes, the premium. So this section that they supplied in the information booklet looks a little bit like an ordinary share capital note, but not quite. So they have got the number of shares on the left-hand side, but there's no rand values given to you. True. And unless you've got the rand values, you're going to really struggle to calculate the average price per share. They also haven't told us the opening number of shares, but we do have 200,000 additional shares issued, 3,500 repurchased. So that is actually a decrease in the number of shares. And there's your total number of shares. So if I wanted to find the number of shares in issue at the beginning of the year, let's start there, because we don't really know if it's relevant yet or not.
Yes.
Let's calculate how many shares were in issue at the beginning of the year. So we'll work backwards, right? Or you can actually set up an equation. You can say the number of shares in issue at the beginning plus 200,000 new shares issued minus the 3,500 bought back will equal 416,700. Okay. Well, otherwise, you can discuss your method of just working backwards,
okay, I'm just taking the total at the end, that 416,700, and then I work backwards. But as we said, you must change your sign. So I will add the 3,500 and minus the 200,000. So then we will get to the same answer, which is?
Right, so this way we will say 416,700 there minus, so we're adding back, just like you mentioned, I'm adding back the shares that were repurchased, and then we are minusing the amount that was added on this side, which is the additional shares purchased. Yes. All right, so if I do that, I end up with, let's see, so that would be 416,700 minus 3,000, no, we're adding back, sorry, my apologies, plus 3,500 minus 200,000 shares that were issued, and that gave me an opening number of shares of 220,200 shares in issue at the beginning of the year. Are you happy with that?
I'm happy with that.
Right. Good idea to always fill in what you know.
Yeah, because you don't know when you're going to need that information.
Yes,
maybe later.
All right, great. Now, let's see, do we have rand values that we can attach to that opening balance over there? So on the information booklet, they did give you a snippet or a section or a what do you call it? An extract from the balance sheet. And there is an ordinary shareholders' equity, but please, we have to remember that ordinary shareholders' equity is ordinary share capital and retained income combined.
Very important.
And here we're focusing on your ordinary share capital, so we need to focus on these particular figures. Right, good. So there's a 28th of February 2023, which would then be the opening balance or rand value of our ordinary share capital. So we can put in there 1,056,960 as the rand value of these shares that were in issue at the beginning of the year. Okay, what else could we possibly do?
Okay, we also have the final value of our share capital for that 416. So we've got that.
So we can put that next to this column over here, right? 2,354,355. Perfect. Okay. Then they do mention 200,000 additional shares were issued on the 1st of April, but goodness me, there's no price.
There's no price. We have no idea where to get that now. So that's an X.
That's an X. That's a serious unknown. Okay, fantastic. Then they say 3,500 shares were repurchased on the 1st of December, EFT payments of 22,400 were processed in favor of the relevant shareholders. So what does that amount mean to you then?
That amount is the final payment. So that's the price we paid for the shares, not the average or the above average.
Yes, because your total paid is made up of two parts.
Yeah.
It's the average price per share, we could say, plus the premium amount per share. Correct. So if the total paid is given to us, can we get a total price per share? Can we calculate that? Yes, we could.
We can. Yeah. Yes.
We would take that 22,400 and we can divide it by 3,500 shares so that we know what was the total amount paid per share.
Okay, that gives me R6.40 per share.
R6.40 per share. Great. So we know that this R6.40 is made up of the average price per share, which we're going to calculate now with the information from ordinary share capital. And then the difference would then be our premium, which is what we're actually looking for because we're going to complete our retained income note.
That goes to the retained income.
Perfect. So how can we calculate the average price per share with the existing information if we don't know what was paid or how much money was raised through the issue of the new shares? What are we going to do? So there's a couple of options. When the shares are repurchased is very, very important.
Very.
Yeah. So in this instance, the shares were repurchased and it was the last transaction before we reach the end of the financial year. So if the repurchase of shares was the last thing to happen, then the average price per share would be the same as just taking the total value of your ordinary share capital at the end of the year and dividing it by the number of shares in issue at the end of the year. So the average price per share would be 2,354,355 divided by 416,700. So what have you got there?
I've got calculated here, R5.65.
R5.65. So our average price per share is R5.65. So now if I was to find the premium amount now, I would take my R6.40 per share minus the R5.65, and that gives
you 75 cents.
Okay, 0.75. Because remember, these two have to add up to the total. Great. So in this particular instance, we had to use the closing balance of our ordinary share capital. But what would happen if our buyback of shares came before the repurchase of shares? What values would you use then? You couldn't do it in this situation.
You couldn't do that because you didn't have the number of shares. You have got the number of shares, but not the value of the new shares that you've issued.
Correct. But if there was a value here, we could have calculated what X is and we could have filled that amount in. And then to calculate your ordinary, your average price per share, we would have added these two values together and divided by this number of total shares. Okay, so the timing in which the repurchase of shares takes place is obviously then very important. Okay, so now we've worked out our premium. What do we do next?
Okay, what I now just want to say, remember this question is about the cash flow. So if they asked you the financing activities of the cash flow, do we need that amount for the repurchase of shares?
Yes, we do.
Yes,
absolutely.
We do need that.
So if we're talking about financing activities, there's 4 basic financing activities. It's the issuing of shares.
Yes.
It's the buyback of shares. It is taking out a loan and it's repaying a loan. Okay, so we've actually got 2 financing activities happening here. We've got the issue of shares and we've got the buyback of shares. So if we just focus on the buyback of shares, the total amount has already been given to us for the buyback of shares. It's the 22,400, which would be an outflow because we're buying back the shares from the shareholder.
I just want to emphasize that the students should be very careful when they work with that 22,400. They must remember that is the total amount of money that went out of the business. But when they work in the retained income or in the ordinary share capital note, then they use the above average and the average. But then they use the 2 components of that price.
Definitely. So how can we work out what money was spent on, or what money was received through the additional shares that were issued. How would we calculate that?
Okay, you would first have to work out the amount of money for the shares repurchased, but the average price. Okay, what was that? Can you remember?
That was 3,500 was the number of shares. And I think it was R6.40 was the total, and 75 cents was the premium, wasn't it? So R6.40.
R6.40 minus. Okay, that's
minus 0.75. So R6.40 minus 0.75.
Okay, that was
R5.65. Yeah. Yes, so 3,500 times R5.65.
Okay, that gives you 19,775.
775. Okay, so that was the money spent here in our ordinary share capital note based on just the average price per share, because this money comes particularly out of ordinary share capital. Yes. So now we have the ability, by working backwards, to calculate that X value. So you'll start with 2,354,355. You will then add back the money spent on the buyback of shares from ordinary share capital, and then you will minus the opening balance of 105,690.
Okay, that gives you 1317170.
Great. So that's what money was raised through the issue of new shares. Yeah. All right. And that would go under your financing activities in your cash flow statement, and it would be an inflow. Yes, because issuing new shares raises capital. It's money that is received to finance the business via equity. Okay, great.
Okay, 100%.
We hope you found that very useful. Please like and subscribe. That would help us a great deal. And if you have any particular questions that you want answered, please post it in the comment section. We would love to help you.